Good evening, everyone, and welcome to this week's weekly review. Let's get right into it by looking at the overall market as a whole and how it fared for this week. So, across the market, we are definitely breaking structure here and are looking much more bearish than we have in the past. So, back here, we had that dip to the 50 SMA, bounced off of it. Once again, we went onto this 50 SMA here, and then we thought we were going to get this bounce, came up to that 21 EMA, rejected it, and then that's when we got our flush below, rejecting that -3 ATR, getting a bounce off of that back up to that 21, and then once again rejecting it. So this is definitely showing now a downtrend with it rejecting the 21 EMA twice now in a row. We no longer have our stacked EMAs, and we're also in a deceleration stage on the market as a whole. So this to me is leading me to think that this market's very bearish now. Its structure is no longer bullish, so definitely be looking towards more um, short trades in the upcoming weeks, I would feel like, just due to its structure here. The thing we definitely need to watch out for, though, is that if we come look at the weekly chart of the ES here, we do still have our stacked EMAs and we're in an acceleration stage. And the amount of times that it's reverted back to this 21, we got it once, twice, three times, and now a fourth up here. So this week definitely flushed quite a bit below that 21, but did end the week closing above that 21. So this weekly chart is still holding up actually quite nicely, and until that actually breaks below that 21, that's when I will become 100% bearish within the stock market. But its weekly chart is still holding up. I am just bearish looking at a daily chart and its structure within that setup. So that's what I'm seeing kind of on the ES. I do think that we could get another reversion up to this 21 EMA, with today having that push off of that -2 ATR here. We get that push back up to 21. I think that'll be a great place to short the market once again. So definitely be something to looking out for next week. So now looking at the other indices here, we can pull up the Qs, and similar story here. You get the rejection of the 21, bounces up to it, rejects it once again, and then you get that flush down to these lower levels here. Same as the ES, no stacked EMAs, and in a deceleration stage. So definitely not something to be looking aggressively long in any of these. This squeeze histogram is also very red, so we do have a lot of bearish momentum coming into it. But then just as the ES actually, it's been holding that 21 EMA this week. So the weekly chart is still good. As you can see here in these prior months, it's held that level. You have had some flushes below it, but every time it's holding that level and then keeps pushing to the upside. So that's definitely something to watch. You're going to want, I think, to get a close below this weekly 21 on a weekly chart in order to be 100% bearish on the market. So that was the Qs. Now let's go take a look at the Dow. The Dow had a good day today, up 1.5%. Pretty strong on it here. Just as the other ones, though, we don't have stacked EMAs in a deceleration stage, rejecting that 21 just like the other one, actually rejecting that 50 SMA here, and then falling down to those -2 ATR levels. I do think with all the indices, though, next week we will get a reversion to the mean, and that will be a good place to start shorting the market once again. Because you never want to short the market once it gets down to a level of -3 or even -2. Your probabilities of those continuing are very low, and a reversion to the mean is a much higher probability trade than keep looking for it to go to the downside. So this is the Dow we're looking at here. If we look at this one's weekly chart, it did actually close below the 21, but just barely, so definitely something to watch. This one could get a little more selling compared to the other indices due to the fact that it has now closed below that level. We also do have this weekly squeeze setting up, so we could actually see this one start to consolidate and chop around, or if this squeeze starts to actually fire to the downside, we could see a lot more selling on the Dow. So now looking at the last indice here, we're going to look at the Russell. So this one's daily chart actually is holding up, I think, the best compared to any of the indices. It's still just kind of sitting in this range bound area, not really doing anything, kind of pinging back and forth. There's no real direction with this one. That being said, though, this indice actually closed the day above the 21 EMA. We have this daily squeeze when we're getting kind of intermittent momentum here. So we get some bearish, we get like we're gaining a little bullish. So kind of can't make up its mind just due to the overall market kind of falling. But I think this one definitely could potentially be the strongest sector looking into the upcoming months, just because the other ones were in such a strong uptrend, where this one has been consolidating for so long. It may be its turn to push up before the other ones, or it could just follow the other ones and fall some more as well. Time will tell definitely with this one, but I do actually kind of like the Russell to the long side compared to all the other indices. And then also, if we look at its weekly chart here, so you can see we've been consolidating right at this 21 EMA for a long time, and this one actually closed above it as well. We have this really high compression weekly squeeze here. We do have a little bit of bearish momentum on the squeeze histogram, but I think if the market can maybe revert back to the mean, this could maybe get the kick it needs to start actually moving to the upside compared to the rest of the market. So I do like the Russell for any long play. It would be within this indice. So now looking at some individual actual sectors within the market, we'll start off here with XLB, just getting absolutely tanked here. So I had this big gap that it filled here, filled that gap, and then once again just rejected that down to these -2 ATR levels, and bouncing off that could look for a reversion to the mean on that one. We come over here to XLC, still have a gap to fill here at 82.79, so that's where this one could push up to, or just revert back to this mean before potentially falling again due to its structure not looking bullish anymore. The energy sector is the only one that actually looks very bullish to me, in my opinion. We had this nice daily squeeze, fire to the upside, got that push to +3 ATR, reverted kind of back down almost to that 8 EMA, and is looking for another push because this squeeze still has good momentum with it. So we have stacked EMAs, and we're in an acceleration stage. So I think this one could definitely see a continuation compared to the rest of the market. Financials here actually look good as well. Stacked EMAs, closing above the 21, low compression, daily squeeze here, looking to fire to the long side, so this one actually is holding up compared to a lot of the other sectors, so financials in my opinion does look good. If we come over here to XLI, just like the majority of the market, kind of getting absolutely cracked here. Had the gap, it filled back up here, rejected this 21 EMA, and is now falling once again. Came down to -2 ATR levels and bounced off of those. Taking a look at XLK here, have a gap to fill eventually at 154.19. Similar as a lot of the other sectors, it comes down to a -2 ATR level and is going to start to bounce or revert back to the mean off of those levels before falling back down or reclaiming those levels and pushing higher. So XLP is weak. This one we have a gap to fill at 71.36, and this one went back to the 8 EMA and then just rejected that and is falling very hard with, this is one strong candle right there. So yeah, this one looks very weak in my opinion. Structure is definitely bearish. Next one we're going to look at is the real estate. Similar with a lot of the other sectors, you get just that big flush to the downside. I'd say look for this one, yeah, as it's sitting at a -2 ATR level to definitely revert back up to the mean here before continuing to the downside. And then if we look at utilities here, this one has not yet bounced at all. This one's been a straight shot down. We had this nice daily squeeze, fire to the downside, and that's why this one hasn't bounced at all. With that kind of momentum, the squeeze will just keep pushing it and pushing it to the downside. So definitely look for this one to revert back to the mean now that that squeeze has finally ran its course, with our first yellow bar happening here today. And then we have XLV. Kind of the same story as XLU here. You had that daily squeeze fire, that momentum just keeps pushing it down to these lower levels, gets rejected off that -3 ATR. Still have some strong bearish histogram bars here, so this one could see more selling before it reverting back to this mean here, but I do think it eventually will revert if the market can start to revert itself back to the mean. And then XLY. So this one I actually like because it hasn't yet fallen too much compared to a lot of the other sectors. We do have this daily squeeze setting up with bearish momentum, so if the market can start to revert a little bit and this gets up to that 21, that may be a nice place to then short this sector. Unless it can surpass that level, then potentially don't mess with that because it could start pushing to that upside. So this is the weekly review. Hopefully you all can kind of see where the market could potentially go and what you should be looking at coming into next week. And I hope you all have a wonderful weekend.